Hi, I'm Barbara Friedberg here with Dale Wannen, sustainable investing expert and portfolio manager. So, Dale, give us a little insight into your background and what brought you to sustainable investing.
Okay. Well, how much time do you have? No,
Let's keep it under like 3 hours.
yeah, totally. So what brought me into this? It's been a long time. I've run Sustainvest for about 10 years now. So that feels like a long time in itself. But previous to this, I've been through everything in the investment field. Like I sold insurance when I was in my early 20s, like making 100 cold calls a day. And then I kind of moved through the ringer, like the banks. I worked for a few banks on the East Coast, and then eventually got involved in the broker world, portfolio management. And then I was really ready to leave the business. But then I met somebody from Calvert. Like Calvert Funds is one of the biggest sustainable investing firms. And I was like, oh, wait, before I leave, that's such a cool way to be invested, is to have some sort of alignment with, like, man, I really care about the planet, and you can invest the same way. So, but I've been doing SRI for now, at least 15 or 16 years, strictly sustainable investing.
So, you have a little bit of experience in the area, right?
Yeah, well, compared to some of these young whippersnappers that come out these days, yeah, and I've had some great mentors that have been doing it for 30 years. So it's been interesting, especially the last 5 years have really changed quite a bit.
Well, let's educate some of our listeners who may not know what is sustainable investing, and also how does that compare or contrast with ESG investing? So
Okay.
give us the 101.
Yeah, 101. So what is sustainable investing? So a lot of people think it's like, oh, it's all for hippies and only Jerry Garcia's crew is going to be interested in this. And it's completely changed. It's really for everybody who cares about, like, not using plastic bags, or, man, I really want to get an electric car, which we're all going to be driving sooner than later. But yeah, so sustainable investing, which stands for Sustainable and Responsible Investing. I'm sorry, SRI. It used to be called Socially Responsible Investing. So if you hear that, you'll know, like, somebody hasn't learned yet that it's changed to sustainable and responsible. But it's just like an investment discipline that considers these things called ESG, which we'll get into in a second. All I look at it's like an overlayment of traditional investing, right? Some people care about, like, what's the 12-month return on Apple, but what SRI does, it sort of gives an overlay by incorporating ESG criteria, which I think you asked that already, Barbara. But ESG, which is the new term, the new acronym being given to the screening process. It stands for environmental, social, and governance, right? It's not rocket science. But what's happening now is all these new data providers and old data providers, you're able to look at how does Costco compare to Walmart when it comes to ESG. So you'll be able to see, I mean, a lot of this data is free nowadays. So you can actually see how one company compares. And now there's a lot of ESG funds that do the screening for you.
So that's it in a nutshell. Now,
that's it.
That's it. Well, we're not going to stop here because there is a little bit more, but I want to throw something out because I get this question a lot, and I've actually researched this a lot. But there's some kind of fear out there that if you invest in ESG investing or sustainable investing, you're going to sacrifice returns.
Yeah.
So I want you to address that now, because
Yep.
all investors want good returns.
Sure. Yeah. I mean, that's what the market's there for, right? That's why we invest in publicly traded companies, because historically, going back all those years, you'll see that, certain companies do really well over the long term. But that one comment, I get it all the time. If I do a group speaking event, it's really one of the top 2 questions I get right away. Like, oh, I'm not going to do this because you can't perform as well. Like, that's it. You don't understand right now, deep down inside, it's like bothering me because it's so incorrect, right? And so where I think that came from, and maybe it still is being said by the traditional money managers, it came from, years ago when sustainable investing, all it was like solar and wind companies, right? We're talking like the 80s and early 90s. And so that didn't do very well. If you look at historical returns of, like, solar companies way back when, they didn't perform very well. So people stayed away from sustainable investing thinking that's what it was, but that's not it. Traditional investing and sustainable investing pretty much perform in line. And I can give you examples. I'll give you one here in a second. So you're not sacrificing returns. If anything, now what's being shown is that companies, publicly traded companies that are addressing sustainability concerns, are starting to outperform their peers. And it's not, like I keep saying, it's not rocket science. It makes complete sense because, well, if I don't know, if Costco is addressing their energy usage at all their stores and trying to cut back on energy usage, and Walmart, and this is just an example, is not, well, clearly performance may be shown in Costco's stock versus Walmart outperformance because of the fact that they're addressing these sustainability concerns. And the last thing I'll say real fast, and I talk too much, but I'm from the East Coast originally, and that happens. being in California you're supposed to slow down. It's happening slowly, but there's an index called DSI. It's like the number one thing I always bring up when somebody brings this up. And you can compare DSI versus the S&P 500, SPY. And you can see that there's no lag in performance. And DSI is an index that does sustainable investing.
So DSI is an aggregate measure or index that follows companies that fall within the ESG category, right?
That's correct. I think we're in a nutshell. We've already said DSI is 400 companies, right? The S&P is 500, and in simple terms, it basically knocks out 100 of the worst ESG performers in the S&P 500. Think of it that way. So you're getting sort of the cream rises to the top of sustainability, and that's sort of the most broad way to look at SRI is to say, how does DSI compare to the general? And it's the longest running index in sustainable investing. So you have the historical returns. That's
a great way for investors who are on the fence and are thinking, well, I'm not sacrificing returns and I'm worried that sustainable investing is going to do that. Just check out on Yahoo Finance the difference between the S&P 500 index and the DSI index and look at the performance. Find out for yourself. So, you don't have to believe Dale.
Yeah, although, that's right. Don't listen to me.
You should. I mean, I think he's a smart guy. So,
I try.
So let's say investors, they want to support companies that are helping the planet, either environmentally, socially, with improved corporate governance. How do people invest in these types of companies? Where can they start?
Yeah, well, they can always call me directly. No, I'm kidding. So that's the big question is if they're just getting started and they have a few $1,000, you want to look at the funds, right? There's things called mutual funds and there's investment vehicles called mutual funds. And then there's ETFs, which are exchange traded funds. And what's happened over the last 5 years is there's really an explosion of all these different fund offerings. I mean, back when I was a young lad, we really had Calvert and Parnassus. There wasn't even ETFs that were doing sustainable investing 15 years ago. Now there's hundreds. So if you're like, man, I really want to buy a US large cap growth ETF, but I want to do sustainable investing. Well, now you have at least, I would say, 10 choices through different ETFs. So if it's somebody just getting into it, you can just Google like ETF, sustainable investing. And then of course, if you pick stocks, there's ways to screen that. You can go to a company like Ethos, which is an ESG screening company. Even Morningstar provides this data pretty much for free nowadays, that you can dig into and find all these, what is the best mutual fund to buy that does sustainable investing? Morningstar provides that data, so you're able to kind of just dig into it. But there's a lot out there. Now,
this might be a little loaded question, but we both love robo-advisors. So are there any robo-advisors that invest in ESG sustainable investing?
Yeah. So when you say we both love them, I'm half and half right now.
You're not in love with them like I am? Okay, well,
yeah.
The truth comes out.
Yeah, no, and I'll mention a robo-advisor that I currently have and run, but for every person that is a DIY or even just wants to rely on a robo-advisor, which we can chat about in a second, there's also the same person out there who wants an advisor to chat with. And like I said, I'm 50-50, and I run both the traditional, like hold the hand type management, and then and I started SustainFolio a few years ago only because I had so many people, especially young people, coming to me who said, I have $8,000. And I'm like, well, you don't need an advisor. What you need is a platform that will take 8,000, as a minimum. And then it goes, you invest in sustainable funds, but then you don't have to worry about it. It rebalances because most people don't want to deal with that. So there's a lot of them out there, a lot of robo-advisors out there now, where if you have $5,000 or 10, you can open up an account, but it's kind of vague. It's a new world, right? And how do you know that some of the big robos are into sustainable investing, or if they're doing the right thing? But that's a big question.
And I want to highlight what you said, because robo-advisors, which are digital investment advisors, and they typically run on computer programs, and they do a lot of the investment management for investors that was typically done by hand by human investors. They're a great new invention. They are not for everyone. And some robo-advisors also offer access to human financial advisors.
Yeah.
But there is a whole class of people that really needs a financial advisor who's, if your wealth is complicated and you've got tax and estate issues, well, then robo-advisor is probably not going to be right for you. So tell us about SustainFolio. Yeah. What is it? well, you told us why you launched it, but
Yeah.
let the listeners know, what is it? And, how's it different from Wealthfront or Betterment or, any of the other 40 US robo-advisors out there?
Yeah. Yeah. So I mentioned SustainFolio. I launched it a few years ago because I just saw this need. And clearly the market was already here. Betterment, Wealthfront, they were making, and they're growing leaps and bounds. It's pretty amazing to see. But I felt with my experience in sustainable investing for all those years, I have a pretty good sense of what ETFs, right, and mutual funds, although SustainFolio only currently has ETFs in the lineup of funds. But what it does is just simplifies the sustainable investing marketplace for people who are like, I don't need to handle it. I really just want to go online. I have 10 minutes to my schedule. I want to make sure that my risk profile is determined by the program, because that's very important. Somebody could be retiring soon who has a different risk profile than somebody who's 22 who just got their first $5,000 and they want to put it into.
Hey, Dale, so tell our
Yeah.
listeners, what is a risk profile? I mean,
Okay.
what does that mean? I might think of risk as, my chance of getting run over by a bus.
Yeah.
How does that relate to investing?
Yeah. Well, with this market this year so far, you might feel like you're getting run over by a bus. No, it hasn't been that bad. Just a little correction here in the NASDAQ. But risk profile means, well, how should you be weighted in a portfolio relative to your risk? In other words, there's asset classes that are a bit more safer, and bonds, definitely historically speaking, don't have the same beta or don't have the same ups and downs as the stock market does. And so there's different asset classes. US small companies is really a risky asset class because it moves around so much, right? So somebody who's 74, who's retired, may not want to have a large weighting in US small companies, but they may want to have a larger weighting in fixed income or bonds. So a risk profile questionnaire, and all the robo-advisors have them because they really have to determine that first factor. That's all it is. It's determining your risk profile when it comes to investing in different asset classes. And then the programs like SustainFolio will automatically weight your risk profile into those different asset classes. So you don't have to do it yourself.
Okay, so got that. I'm old, I'm conservative. I don't want a lot of risk. My portfolio will hold more bonds.
Yeah, you're not that old, Barbara. You're not that. Yeah, it should. And the bond market's very tricky right now as well. But going back historically, which is all we have to base this on, is historic returns, you should most likely be heavier weighted in fixed income / bonds because of the fact that you don't want to see your portfolio drop 30% when you're living on a fixed income. Whereas somebody who's 22, a 30%, they're going to see a negative 30% soon enough. It may not be this year, but you would think that occasionally those returns, that happens.
And they've got time to make it up.
That's
so
right.
It's, unless you need your money tomorrow for a down payment on your house, you can go a little more aggressively for most younger investors. Okay. So tell us, what is SustainFolio? Explain it to us. Tell us who, where are they investing when they go with SustainFolio, and how are you different than the ESG portfolio at, Schwab or any or at any of the other, Schwab Robo doesn't offer an ESG option, but I'm sorry.
Yeah. Well, I'm part of Schwab's platform.
Right.
So,
right.
Yeah.
And I know we'll get into that, but how are you different than the robo advisors that say, do you want a regular market matching portfolio or do you want an ESG portfolio?
Sure. Yeah. So you already hit the number one thing, which is all we do is sustainable investing, or all I do is sustainable. So you're not going to go to a firm and have to dig around to see, oh, there's their sustainable investing choice, right? This is all we do. And I do it because of the fact it's what I believe in, right? It's not a moneymaker for me. In other words, the big robos out there, they're seeing an opportunity for assets maybe, and so they try to capture those assets. Whereas with Sustainvest and SustainFolio, it's all we do. It has a $5,000 minimum, which is kind of nice. It's pretty low compared to some of the other robos. Now, some of the robos have a zero minimum. And I think, not to beat around the bush here, but if anybody calls and has a question about making a deposit in their IRA or did I make a contribution, what's crazy is they're going to speak directly with me, most likely, because I'm the one at the firm that handles all the portfolio management. So I think there's something to be said, and I'm not going to get into details of other robos out there, but I've heard stories of, tough to get a hold of somebody. And they're big tech companies with a lot of, and I'm going to go off on a tangent here. And not that there's anything wrong with them, but they're big animals. They're big beasts, and their job is to raise assets because, and if you watch CNBC, you'll see they've raised a lot of money to maintain these platforms. So I guess where I'm going is, if you're more into like a mom and pop shop, Dale, I pick the actual ESG funds, the ETFs myself. I look at the fee structure of these ETFs. I want to make sure that I'm not buying some ETF that says it's ESG. But when you dig into it, it's definitely not the cleanest fund out there. So I'm doing all the digging through the weeds. And so you're getting a smaller shop, but and that's not for everybody either. So that's what's different. I give 1% of my profits away, or my revenue, through 1% for the planet. I mean, is that a huge deal? No, but I always post this on Twitter. Like, is Goldman Sachs part of 1% for the planet? Because it'd be really cool if they were, if they gave away 1% to environmental organizations. But yeah, now you got me on my soapbox, but that's the gist of it pretty much. And I do offer different choices through the program.
So before we wrap up, tell me, what are the choices, and how easy is it to get started?
Yeah.
Let's say, I want to invest sustainably and I want a robo. I don't want to pay a lot of fees. First of all, tell us the fee for this Robo-Advisor. How easy is it to get started? And, what's the downside?
Sure. So the fee is 0.5% across the board. So that's important to ask you. Top 3 questions, if anybody's digging into these. 0.5% is an annual management fee that's being charged on the assets. So $10,000 account, 0.5%, that's $50 a year for a $10,000 account. So I've seen people spend who don't, quadruple that on a dinner. So it's pretty amazing to think that you're able to have a robo pay 0.5 point for the whole year, and it's your money, it's your nest egg. So it's just, I always try to relate the fee to, like, you'd be surprised what people pay out there for clothing, and your investment portfolio is probably a lot more important than that. So that's that. I forget your other questions, Barbara, but it's really simple to get started. And just like a lot of the robos, you go through, you answer a questionnaire. My robo is run through Charles Schwab. So keep that in mind. I'm an independent investment advisor, but I have a third-party custodian, which is Charles Schwab, that runs it. So when you go to SustainFolio, eventually it will lead you to the Charles Schwab robo site. And I think that's a good thing, because it's sort of checks and balances. You're getting an independent advisor who I'm not incentivized to sell funds and things like that. I have a fiduciary duty, and on top of that, you're getting a third party, a different custodian. So it's almost like a checks and balances thing. You get statements from my quarterly statements, and then you get Schwab's monthly statements. And I think that's a nice way to make sure that all wheels are turning in the right direction. But and the different choices, now I have an environmentally focused, the E of ESG, and a socially focused choice on top of the core portfolio. And the only reason I did that is clearly ESG is growing in leaps and bounds. And certain clients were like, I love the core portfolio, but I really want to have a little bit more of a weighting in alternative energy, because I really believe that solar and wind and other choices are going to accelerate going into this new world, and for the next 5 to 10 years. So I'd like to have a portfolio besides the core that's more emphasized to things like that, and social issues, clearly. So if people are passionate about that, but they also want to make sure that their portfolio is aligned with their risk profile, they can kind of lean a little bit into the different issues out there. So
well, this is all really interesting. I appreciate you outlining the ESG investing field, because I think that is so popular, and so many people today, they want to invest with their values. Yeah. So I've written an article about ESG investing, and it has a lot more information, not only about the field, the topic, but we've also got some more details about SustainFolio.
Yeah.
And I encourage you to read that. I'll include the link below. I also encourage you to sign up for my channel if you want to learn more about investing, robo-advisors, and a variety of financial related topics. If you like this video, leave a comment, give us a thumbs up. And before we sign up, Dale, tell us, if people are interested in learning more about you, about SustainFolio, and even about sustainable investing, where can they find you? What should they do?
Yeah, well, Google's a wide open world now. So there's websites. I try to put as much as possible, including fee structures and everything on the website. So SustainFolio.com is the robo. And then Sustainvest is my umbrella organization. That's where it all started. And there's a lot of information there about myself and the world of sustainable investing. And feel free to email me. You can email me through the website with any questions.
Wonderful. It was great chatting with you, Dale. I'll put all the links down below in the information, and best of luck to you. And thanks again for coming on the show. Bye.
Bye.